Hello, everybody. This is Sarka Wilde from Distinct Property Consultants, and I've got today John Cox from and Josh Mann from Insurance Desk and Mortgage Desk. We will be covering some changes that may be pertinent to the landlords as well as vendors in terms of mortgages and insurances going forward following obviously the outbreak of coronavirus. So first, guys, thank you very much for coming on. I am glad to see that you are both well. Firstly, I would ask John to come on to talk a little bit about mortgages. So over to you, John.
Cheers, Sarka. Yeah, unfortunately, this is Steve's night's presentation. He's having some technical issues, so I'm just going to whip through these and just go through about the mortgage market as it is at the moment. But I think, and just some observations that Steve's obviously highlighting to people. So most mortgage lenders, as a lot of people will know, have agreed to allow 3-month payment holidays, and the word holiday is a really bad word because obviously it's effectively a mortgage deferment. And ideally, it was brought in if tenants ring you and they've got a problem, then you can go to your lender and say the tenant's got an issue, and then you can defer your payment depending on which way the lenders are going to deal with it. But the money's got to be obviously repaid at some stage, and it's the same with the tenant really. So this is happening across the board with regards to buy-to-let and residential mortgages, although you would think the lenders are going to prioritise dealing with the residential mortgage market first, and that's where they've moved a lot of their resources to. And as the slide there says, basically the aim is there to pass that saving on to the tenant that's under financial pressure, because there's no evictions or anything like that at this moment. So just to reinforce that this is really, you want to only use this as a last resort. So you want to exhaust any other options you have first, and leave this to have in the background for when you need it really, because ultimately you've got to pay it all back. So that's that. So basically, lenders are only going to do that if your payments are all up to date. Also, it's good practice to have a conversation with your lender direct, check they're obviously all okay with it, in that sense that you've got a tenant that's struggling, and obviously you can pass the savings on to the tenant and also get all this in writing. And whilst a lot of lenders say it won't affect the credit file, there is possibilities that it is going to cause issues at some stage. And also you've got it, I don't know whether it's covered on the slide in a little while, but if you are thinking of purchasing something at some point, you've got to see the problems you're going to have is if you're asking a lender for a payment holiday on a property and then you're looking to buy a new property for whatever reason with the same lender or the same lender that belongs to the same group, then they can obviously have that information. So that's really on that sort of side on there, but each lender's doing it and they're all acting slightly differently, so it's specific to the lender.
John, your slides are not showing on the screen for some reason. It's just you show your picture, your face, so I don't know whether we need to swap it somehow. Let me just, okay, yeah. It's fine now. We can see it now. So basically, what you are saying, especially having it in writing, it's in line what we've been discussing with our clients, and we actually have been discussing this with the tenants. I share with you the view that those rent holidays or mortgage holidays shouldn't be called holidays, but a deferral, because that's what it ultimately is. And we always obtain everything from our tenants in writing and have everything documented, so the landlords have got potential evidence for their mortgage company if they do need to go that route.
Yeah, I think so. I mean, there are some good practices out there excuse me, like effectively talking to all your tenants, speaking to your letting agent, like you're saying, like someone like Sarka, that can basically explain in detail that the word holiday is a bad word, and obviously the tenants have got to catch up. So I think, you know, sometimes in what I've heard in cases where it's been put in a certain way to the tenants that, you know, obviously it's a rent deferment, and they've effectively got to catch up with the payment, then they're more inclined to give it a second thought, really. And you know, you can obviously live that with that. It is really there for a tenant that might not have been furloughed or whatever. So and you know, obviously there's no evictions at the moment. So the idea is to collect as much information from the tenant, make sure they absolutely 100% need it, and then you can pick up the phone to your lender and go down that road. But if you have got, you know, other properties that are have high cash flow, you better off diverting some of that cash flow over to that property, even if the tenant is struggling, and meeting your mortgage obligations, I think, personally.
Mm-hmm. Thank you. That's very, very useful, and it comes down again to firstly managing tenants' expectations in order to also avoid any potential deferments if that's possible.
Mm. Mm-hmm. So that's really as it is at the moment. And obviously, a lot of lenders are struggling with service levels, mainly because they're having to move a lot of people over to deal with the incoming call volumes, and helping people with main res, you know, and obviously all this sort of stuff. So, you know, immediately a combination of that and a combination of the lenders not knowing where the risk is in the marketplace, and valuers not being able to get out and do valuations, has meant that lending is still available. But the first thing, the way the lenders have controlled the appetite and de-risked their business, is to reduce loan to value. So that was the first thing that happened, is that loan to value dropped right down. I mean, a lot of lenders are dealing with new business differently. Quite a lot of lenders are now taking the approach that they will actually carry on underwriting the case. So they do all the checks in place, but they will add they would add a clause to the mortgage offer to say, obviously, a valuation has to be done before funds can be drawn down. So that will happen at some point. So, you know, as the lockdown is relaxed and there's more clear information from RIC surveyors, and that will get back to some degree of normality. But where RIC surveyors will be on current mortgage valuations is anyone's guess. But lenders have got electronic valuation models they can use. And I think the key message there is anything that's low loan to value is probably pretty much going to be relatively straightforward, apart from the service levels, to get funding. If you've got any sort of mortgages that are on 2-year fixed rates, or anything popping off of a rate, and you're looking to secure something using a product transfer, using someone like Steve or someone to talk about your choices, but trying to get a product transfer and trying to secure something like a 5-year rate at the moment probably make good sense, because, you know, we are going to see values drop a bit over the months and year ahead, and also lending is going to take a little while to get back to the levels it was at the start of the year. So, you know, it makes common sense to grab the rates that are available, and lenders will have an idea of the value of your property on that sort of thing. So refinancing, remortgage product switches, all good opportunities. The other thing is look across your portfolio, and if there's a way of consolidating some debt on one property, so perhaps taking the property up to 70%, 75% lending, and having an unencumbered property, then that gives you a really good opportunity in the future. If you've got property in your portfolio that's unencumbered, then you can use that to leverage against if you see any deals and you're looking to go back into the marketplace at some point to add to your portfolio.
John, I can see obviously where we were talking about loans to value, because obviously initially when the lockdown came, the lenders announced only 65% loans to value, but then they met with Bank of England and they started a little bit releasing higher loans to value. How affordable it is, if we now leave aside, for example, buy-to-let mortgages, how affordable it is at the moment to obtain, say, 80% loan to value mortgage. And the reason why I'm asking is because naturally if there is still availability to receive 80% loan to value, then that would mean that there would be still demand from first-time buyers. As we know, first-time buyers are driving market, so it's probably a little bit weary that a lot of vendors may be interested in.
Yeah, I mean, I think no one's really going to know what shape the market's in until we relax things. I know Taylor Wimpey have started back. I mean, obviously that's a big house builder in the UK. A lot of the big house builders technically could have stayed open, but they mainly decided to close their sites up. What you would think is that they're going to start opening up the strategic sites they got just to test the availability of materials, see if they can get stock there. But you know, these are businesses that have got a product that obviously needs an end user to buy them, and if the appetite is not as strong as it should be, then they're going to just release sites slowly and things like that. But you know, it's like any debt or mortgage. The lenders are going to underwrite it based on the current situation. So the factors or the variables you're going to have is the valuations, because obviously no one, you know, especially in the new build market, it's like a new car. So you're going to have, you know, RIC surveyors having to do some work around where they think the values are, and obviously they're going to be talking to agents like you to get an idea of comparables.
Yes.
If you know if agents in the area are starting to discount properties by 10-15% to sell them, then that's going to feed through to the RIC surveyors, which is ultimately going to affect their values on things. And the other thing is what's underpinning the debt that the lenders offering. So you know, if someone's in a very, very good job, then you know, I mean, the strength of the market will be key workers at the moment. Any key worker is obviously a very good tenant or a very good person to obviously have applying for finance, because it's been proven that on the pandemic that these people have obviously been in demand. So I think lenders are going to look at things on the main res, on those sort of elements really, and look, you know, what's the strength of the person, and that'll be it. I think that, you know, you're going to have the challenge, I think, is going to come from the RIC surveyors potentially, because you know they're trying to put a value on something when, as you know, at the moment the market's been poor, so there's no comps.
Yes. At the end of the day, the market will dictate itself, to be honest with you. And we know, I as an agent know that there is demand, that people are interested in buying. It's just that they cannot, which is slightly different to a recession. If you were in recession, the demand drops, and then that will start driving prices down. But at the moment, people were forced to stop buying or stop doing anything. So one would hope that, and as we know, prices are driven by demand. So one would hope that when the lockdown finishes, providing that funds are available for people to borrow, that the market would continue. But as we all said, we just have to wait for that lockdown to finish. Well,
I think you're going to see, you know, obviously the thing's going to evolve over the months ahead. You know, you're going to have lots of businesses. I mean, although staff have been furloughed, some businesses are going to have the transaction or their income massively affected. So you know, you are unfortunately going to see redundancies take place, things like that. But you know, there will the property market, once it's functional, as in you can get out and do valuations, there will always be people willing to sell, and there's always people willing to buy. So that's not going to go away.
Yes.
Exactly. The hard thing is just the surveyors being as accurate as possible on valuation prices. But yeah, I think no one honestly knows the answers, and we, you know, as of today, we still don't know how the relaxation is going to happen. But ultimately, you know, if you're buying something that you can add value to, you know, and improve, then you're going to force the value up. And you know, lending will always be available for things like that, because there's a safety net for those sort of properties. Just to add, should have added at the start, the basic mortgage desk is effectively a trading style of J.R. Cox, and we are regulated by the Financial Conduct Authority for, you know, regulated mortgages and, you know, buy-to-let finance, commercial finance, and bridging finance, that sort of thing. Although the latter ones aren't regulated by the FCA. But just to add there's Steve's details there, for anybody that wants to just bounce some ideas off to Steve with regards to, you know, what's possible. But it is an ever-changing marketplace. So.
Well, thank you very much, John. Thank you for that. I'll just bring the attention again to the Steve's details, which don't worry, they were on for quite a while, so people could have noted them. But if anybody needs to speak to Steve, you can contact me directly, and I'm happy to point you out the right direction. Now, what I would like to do, I would like to introduce George, because obviously you've got also insurance side of business, and there are also, I presume, some changes or some pertinent information in terms of the insurances, landlord insurance, landlord rent protection, etc., etc. So if we just hand over to Josh, and
Yeah,
Josh can give us some brief, hopefully some positive news. Josh, please.
Well, yeah, I mean, again, it leads on from what John was saying, that it's forever changing market, and insurance is exactly the same. So although the contracts are more fixed term, there's still conditions and endorsements within a policy that need to be continuously complied with. And that's, I think, where people will fall short, because they don't tend to think, oh, hang on a second, it's been unoccupied for so long, or my tenant type's changed, I should call my insurance. So it's just bringing in some insight into how to keep covered and correctly cover going forward, really. So shall I share my screen quickly?
Yes, if you
I've got
mind.
So there's just some points really around landlords and property insurance, which is where we sort of specialize. Rent guarantee is one question that we're getting asked about continuously, and a lot of landlords either don't have it and they want to take it, or they have it and they're trying to claim on it. So the first scenario is, if you don't have it, most, if not all, rent guarantee policies have clauses in there which mean you either can't claim within the first 90 days, or you have to have eviction proceedings against the tenant, which we know now can't happen in the interim or in this emergency legislation. So both scenarios mean you won't be able to claim, even if you can take a policy. We've heard of potentially one that may be accessible, but again, it's not been checked and it's not been proven. So until we can see a policy wording on that, then we haven't seen any scenarios where rent guarantees paying out for COVID-19 defaults. So although it's not good news, at least it maybe gives some light, and it gives people the right answers, so they don't pay for a policy that they can't use. Another thing we're seeing as well, which was John was saying, was the change in tenant type. I think a lot of landlords are now going to look to move their model to a more secure model. So whereas before it's traditionally AST, 6-month minimum, this whole situation has kind of thrown that out the window to say that, look, that's probably one of the most vulnerable letting types. I mean, if you've got an agreement with the council, say a social housing, then these guys are offering you, say, 3 to 5 years fixed rent. They all guarantee the property comes back in the same condition, and they are potentially providing a higher monthly income. So a lot of landlords may go towards that model, but for insurance purposes, it's high risk. So if you don't inform your insurers, it could mean that, number one, they can't cover it, or number two, they may charge an additional premium. So again, it's just saying that if you don't highlight this to your insurers and you have a claim, that's where you're going to really find a problem. So it's about just making sure you're up front from the start.
Yes, I wanted to say, so for example, we as agent deal with guaranteed rent scenarios for where we would basically guarantee the landlord 3 to 5 years secure income on the property if the property qualifies for that. And it's actually quite, and I know how it's important for any landlord like that to have conversation with yourself, guys, or if they choose to speak to anybody, it's up to them. Companies like yours, to make sure that they've got always right covers for everything, because ultimately it's their property, and even if they hand it over to somebody, they need to make sure that they have a right type of insurance if anything unforeseeable happens.
Exactly, because it may seem such a small situation that's, you know, you're letting it to a letting agent. You may think actually that there's no consequence there, but if you're, as the letting agent, have an AST with the tenant, it's actually not the landlord who controls who's going in the property. So again, the insurers will class it as sublet, which 90%, well, up to 90% won't want to cover sublet property. So it's just such a small point, but it's so important to highlight, to say to your insurer, look, my property is going to be sublet. Is it something you can cover? And you know it's covered from the start. There's no questions when it comes to claim, and that's where you see, oh, insurance hasn't paid out again. It's rubbish. It's not worth the paper it's written on, because the info is not put in correctly at the start, so it doesn't come out the other end. And it's something that can be covered so simply. I mean, we see it so many times. Rent to rent is a new thing, or not so much new anymore, but it's an ever increasing market. So it's so easy to cover. So just make sure you mention it when you are getting the cover.
Josh, I may have a question which has occurred to me recently. Obviously, being letting agent, always looking at potential risks and people wanting to make claims on anything. Obviously, we would see, I would expect that in future we might see some claims from potentially families of nuns or nuns who may have contracted coronavirus, and they might try to basically say it happened in the property, etc., etc. Is there anything that landlord could be protected? For example, I know that the part of buildings insurance is also landlord's public liability, etc. Is there anything in place in terms of protection for landlords at the moment in terms of any potential coronavirus claims?
I had a thought as well that could be a potential one where, you know, it's like the PPI scandal and just other areas where there is some legislate or some chance of getting some money from somebody. So property owner's liability is the one that would be covered. So for landlords, that is covering any injuries, bodily injuries, but also diseases within their property. But the highlight to mention there is that there has to be negligence. So the landlord has to be proven negligence for a property owner's liability claim to pay out. So it'd be very difficult to prove.
It's very much if the landlord did not follow government's guidance on moving people in and out, or having contact with somebody, for example, or bringing a new person into the household and things like that, scenarios where obviously it's a government's guidance, but once there is a case where potentially somebody is making lawsuit against the landlord, that not following government's guidance could be seen as a negligence potentially.
This is where it's going to be good to keep a close eye, because there'll be one case that will set a precedent, and I think then the rest will follow. It's going to be very hard to prove that's how a landlord could be at fault for the spread, but potentially yes, if it's a HMO, there's one tenant, they've been informed and they've not done anything about it. It's then spread throughout the property. It could be perceived that they've been negligent. It's within that cover. It's along the lines of you've got to keep your property up to the right standards. So if you fail in the Health and Safety Acts or defective premises, again, that's where you have property owner's liability. So if it came to light, again, that will be an area of cover. That's just standard in any policy.
Exactly. Well, thank you very much, Josh. would like to thank you both. I think it's been very informative, and I hope that our clients find it very informative. Obviously, you have left your last slide, so there are your details on where people can reach you. Again, if any of our clients want to speak to you, then they have details here, or they can let me know. And
I mean, we're very much still cracking on, really. So I mean, everything needs to be insured. People have got property risks, but
yes.
The good thing is we can accommodate for all those types of changes: unoccupied, changing tenant types, anything to do with property that you're looking to go into. Again, yeah, just give us a call and we can provide some guidance on the way forward.
The other thing is obviously also if any of your clients have got commercial premises that may be empty or they're repurposing them as well, it's just, we do offer a free insurance review. Josh can go through that and just check if they've got the right covers in place. I mean, I know recently we had a conversation, but one of the areas that we think is probably going to grow quite well is limited company protection. A lot of directors don't know that. They feel that they're operating their business in a limited company means they've got a limited liability when it's only the company that's got a limited liability and the director hasn't. So you can protect that in the same way PI, professional indemnity, protects people for financial loss. You can get certain policies that can de-risk things and protect your business. Because there's going to be a lot of decisions to be made. Certain businesses are going to get furloughed staff back and have to make possibly decisions on keeping certain staff and things like that. So those sort of protection plans make it, help to protect your business. So jobs can help on those matters.
Well, in a way, it's probably now a good time to start getting in contact with you guys, because obviously it's good time for the landlord to start making plan and being aware of potential risks and assess these risks and put potentially the plan of action in place.
Yeah, definitely.
Yeah,
well, thank you. I'm just mindful of the fact that we might be running out of the time, so I would like to thank you again for coming on this call, taking out of your time. I know that you are obviously working quite hard in this lockdown, and thanks goodness for the technology. I think we will be all Zoom experts, even techie people like me. So I had to flick a little bit through the screens initially until I got grip with it. So thank you very much, guys. Stay safe, stay well, and I'll speak to you soon. Thank you.
Take care. Cheers.
Take care.
Bye.
Bye.
Bye.